AI is only growing faster in today's economy and will make a pivotal change in the future. According to this report from the Grand View Research, the global artificial intelligence market size was valued at $136.55 billion last year and is projected to expand at a compound annual growth rate of 37.3% from 2023 to 2030. Now this means that you have the opportunity to invest in some of these ETFs at the beginning stages and receive a good return on investment. Do you remember the times where we wish we could have bought Bitcoin for $1 or Amazon stock for less than $10 in 2010? Then don't make the same mistake with AI. Now the first ETF that I have picked on the list is the Quantum and Artificial Intelligence ETF, and the ticker is QTUM. This ETF sounds quite complicated with the acronyms that it uses, but it essentially will provide exposure to companies on the forefront of machine learning, quantum computing, and cloud computing. In simple words, it solves problems that are too large or too complex for traditional computers. One example that I really like to explain this process is with climate change and weather forecasting. It is quite difficult to provide accurate data for this due to an increase in global warming that we are seeing. Quantum computing is there in order to ensure accuracy of data, so we can provide measures to prevent this. Now, if we look at the top 10 holdings of the ETF, we can see a few blue chip names here, such as Intel, Hewlett-Packard, and Microsoft, all roughly holding a combined 217,000 shares. In terms of how long this ETF has been around, it was launched in 2018, which will now mean that it has been 5 years since it was formed. Since its launch, it has gained an increased value by 23.98, but even on the year-to-date chart, the performance is quite healthy with a good 24% increase. The number of total fund holdings is 71, and it is the most affordable ETF on my list as it has an expense ratio of 0.4%. The next fund on my list is a global X Robotics and Artificial Intelligence ETF, ticker symbol BOTZ, and it provides more exposures to companies at both the forefront of robotics and artificial intelligence, so they are investing in AI, automation, and industrial robotics. The largest holding is Innovator, as also noted in the previous ETF that we had a look at. So I like how they have invested in this ETF for the same reason of it being the world leader in artificial intelligence computing. But another thing to note here is this company. Now, one of the top holdings on their list is Intuitive Surgical, and they develop and manufacture robotic robots for the healthcare sector, where they have systems like Da Vinci that will provide precise data to aid and improve surgical work. The fund seeks to track the Index Global Robotics and Artificial Thematic Index, a market cap weighted index of tech and industrial stocks involved in artificial intelligence and robotics from developed countries. The fund is mainly concentrated in the United States at 47% and in Japan at 32%. It currently has 44 holdings and the expense ratio is 0.69%, which is a good choice for investors who want an ETF that has a narrowly vested interest in industrial robotics and automation specifically. With regards to performance, the fund has increased by a healthy 30%, and what I like about this fund is that it has a nice global presence which gives a diverse range to a portfolio. Before we consider moving on to the next ETF, I'd love it if you could hit the like button if you appreciate the content and subscribe to the channel. The third ETF on the list is IRBO, which is iShares Robotics and Artificial Intelligence Multi-Sector ETF. This is currently the second most affordable on my list, which has an expense ratio of 0.47%. The fund seeks to track the NYSE FactSet Global Robotics and Artificial Intelligence Index, an equal-weighted index comprised of companies from around the world involved in robotics and artificial intelligence. It has a larger holding than other ETFs, totaling 113, and has a more geographical exposure, including the United States being the highest at 53%, China at 12.5%, Japan at 10.79%, and Taiwan at 7.98%. One of their largest holdings is Me2 Inc., which is a Chinese company and it was founded in 2008. Their AI-driven technology is essentially making users more beautiful online with these different apps that they have. It is also worth noting that Netflix is on their list. For its year-to-date performance, it has achieved a nice 14% increase. The fourth ETF on the list is the Roundhill Generative AI and Technology, with chat being the ticker symbol. One reason why I like this ETF is because even though it is in the artificial intelligence space, it is much different compared to robotics and therefore provides an alternative to your portfolio. And this essentially comes under the creation of ChatGPT. This app has managed to surpass 100 million users and is one of the fastest to do so. ChatGPT in general is pretty well known globally, and it is widely used as a tool by many people. And then the other side of this ETF includes providing generative AI tools and making it available to third-party providers to build their own applications and products. Now, the top 5 holdings do include 3 big names which you will recognize, and they are Nvidia, Microsoft, and Alphabet. The fund itself has a much small total holding compared to the other ETFs and is more concentrated at a total of 36. The expense ratio is also much higher for this particular ETF, which it is currently at 0.75%. For the year-to-date performance, it is up by 10%, which is not as much as the other ETFs have achieved. However, you have to bear in mind that this ETF was only launched last month on the 18th of May. While this ETF does seem very lucrative for the future, it does pose some risk as it is still in the early stages of being launched, and so we do not have much data to be able to look at its performance in the long term. I do think that it is definitely an ETF worth having on your radar and keeping a track of in a few months' time. The fifth ETF on my list is Global X Robo, Global Robotics and Automation, ticker symbol ROBO. This particular ETF invests in global companies that are focused in robotics, automation, and artificial intelligence. There are currently 78 holdings, and the expense ratio for this ETF is at 0.95, which is the most costly ETF on this list. Also, another reason for this ETF to be listed at the bottom is due to the expense. Now, for the year-to-date performance, it has done extremely well with the almost 25% increase. Their largest holding is Ocado, and their third largest holding is Intuitive Surgical, which is a name that we have seen previously in the robotics space. The sixth ETF on my list is a First Trust Nasdaq Artificial Intelligence and Robotics ETF. When looking at the top 10 holdings for this ETF, you can see that there are companies here which we have not even heard of. The first company, PKSHA Technology, is a Japanese company that develops algorithmic solutions mainly related to natural language processing, image recognition, and machine learning or deep learning technologies. In terms of country exposure, the United States has the most, with just under 50%, Japan coming in second place at 12.83%, and a small percentage for both France and Israel of 6.51% and 5.53%. The expense ratio is a little high at 0.65%, but it is not the highest that we have seen on the list today. For performance year to date, it has seen a healthy 14.29% increase. And the final ETF that we're going to have a look at is the Innovator and Deepwater Frontier Tech ETF, ticker symbol LOUP. They seek to provide exposure to the companies in areas such as artificial intelligence, fintech, robotics, autonomous and electric vehicles, and virtual or augmented reality. Looking at the top 10 holdings, only Adobe Systems and Uber seems to be the most recognizable on the list. The first holding called X, and this company is where they design and develop software, some of which they provide a technology platform analytic process automation to share and turn data into results. For country exposure, the United States is at the top with 66.75%, and the Netherlands and Brazil with a smaller percentage of 5.89 and 5.21% respectively. The expense ratio is on the higher end at 0.7%, so it is much more costly than some of these ETFs on the list. With regards to its year-to-date performance, it has seen a healthy 20% increase. It would be great if you could let me know in the comments below if you have already invested into one of these funds or if you have heard of any other interesting funds which have not made it to my list.